Hello, and welcome back to the channel. I'm Algabot, and this is where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. Today, we're studying a strategy called Expanding Thrust Runner. It's a pure price action approach, which means it uses no traditional indicators at all. Instead, it reads raw candle structure to spot momentum that is still accelerating. We'll keep everything plain spoken and beginner-friendly. By the end of this video, you'll understand exactly how it identifies a move, how it manages its stop and target, and how its settings shape its behavior. Let's get into it. So what exactly does Expanding Thrust Runner do? At its core, this expert advisor is a momentum continuation strategy. Rather than waiting for a market to pull back or reverse, it looks to join a move while that move is still expanding. The central idea is that genuine momentum reveals itself as acceleration, not simply direction. A market that is truly being pushed in one direction tends to print a sequence of candles that each close near their extreme, that step progressively further, and that grow in size as the move develops. This strategy is built entirely from raw price data. There are no moving averages, no oscillators, and no external indicators of any kind. Every value it needs is calculated directly from the open, high, low, and close of recent candles. It measures three things at once: how strongly each candle closes within its own range, whether the candles form a strictly sequential structure of higher highs or lower lows, and whether the overall run is accelerating and large relative to the recent average candle size. Because it reads structure rather than a smoothed indicator, it can be applied to many instruments and time frames. Traders often study approaches like this on major foreign exchange pairs, indices, or metals, on intraday time frames such as the 15-minute or 1-hour chart. It is designed to take one position at a time, and it hands the management of that position entirely to a fixed stop loss and take profit, so there is no averaging in and no grid behavior. Who is a strategy like this suited for, from an educational standpoint? It tends to appeal to traders who are interested in price action and momentum, and who prefer a clearly defined, rules-based entry. Remember, though, that momentum strategies can face repeated small losses during choppy, sideways conditions, and trading always carries the risk of loss. Everything here is for learning purposes only. Let's walk through the mechanics step by step. The expert advisor only evaluates its rules once per newly closed candle. It watches the still-forming candle, and the moment a fresh candle opens, it knows the previous one has just closed and is ready to analyze. If a position from this strategy is already open, it does nothing further and simply lets the existing trade run to its stop or target. First, it builds a yardstick. It looks back over a window of candles sitting behind the recent run, by default 14 of them, and calculates their average range, that is, the average distance from high to low. This average becomes the reference for what counts as a meaningful move. Next, it inspects the run itself, which is the small group of most recently closed candles. By default, it examines 3 candles. For a long setup, it checks 3 conditions together. The first is closing pressure. Every candle in the run must close in the upper portion of its own range, by default at least 65% of the way up, and each must be a genuine up candle. This shows buyers were in control into every close. The second is structure. The candles must form strictly sequential higher highs, each high above the one before it. The third is expansion. The newest candle's range must be at least as large as the first candle's range, confirming the move is accelerating rather than fading. If all 3 align, the strategy performs one final check. It measures the net travel of the run from the first candle's open to the latest candle's close, and requires that distance to be at least a chosen multiple, by default 2 times, of the average range we calculated earlier. This filters out small drifts and keeps only decisive moves. When the long conditions are satisfied, the strategy signals a buy at the current ask price. It places the stop loss just beyond the lowest low of the run, with a small buffer added below it, anchoring the stop to real market structure. The take profit is then set as a multiple of that risk distance, by default 1.6 times the risk, so the reward is defined relative to the stop. The short side mirrors this exactly. It requires down candles closing near their lows, strictly sequential lower lows, an expanding range, and sufficient net travel to the downside. The stop sits just above the swing high, and the target is again a multiple of the risk. One position at a time, managed purely by stop and target. Let's look at the actual MQL5 code running inside the Expert Advisor, shown here as it appears in MetaTrader. At the top are the input parameters. ThrustBars sets how many consecutive same-direction candles must form the run. Raising it demands a longer, more sustained move before anything is considered. ClosePosMin controls how close to its extreme each candle must finish. A higher value is stricter and accepts only candles that close very near their high or low. MinThrust multiple sets how large the run's net travel must be compared with the average range, so a higher number filters for more decisive moves. Range window is the number of candles used to compute that average range yardstick. Stop buffer frac adds a cushion beyond the swing extreme for the stop, expressed as a fraction of the last candle's range. RewardRisk sets the take-profit distance as a multiple of the stop risk, and lot sets the fixed position size. Now the signal logic. The condition checks that all bull is true, that higher highs is true, and that expanding is true. The three pressure signatures stack together. Inside, the code calculates net, the run's net travel, as the newest close minus the oldest open, and confirms it is at least min-thrust multiple times the average range. If so, it reads the current ask price as the entry, sets the stop loss to the run's lowest low minus the buffer, and measures the risk as entry minus stop. Provided that risk is positive, the take profit is entry plus reward risk times the risk, and the order is placed. The short block is the mirror image. Everything is derived straight from the candles you see on screen. Let's bring this to life on a chart. On the left, price has been drifting quietly, printing small candles. This calm stretch is what the strategy uses to measure its average range. Then a series of 3 green candles steps in. Notice how each one closes right up near its high, how each high pushes above the previous high, and how the candles grow progressively larger. That is closing pressure, sequential higher highs, and expansion all appearing together. On the close of that third candle, the long conditions are satisfied and the strategy signals a buy entry. The stop loss is placed just below the lowest low of the run, marked here as the swing stop, and the take profit sits above it at a multiple of that risk. Over the next candles, price continues advancing in the same direction and reaches the take profit level, completing the long example. Now watch the right side of the chart. After topping out, price rolls over and a fresh run forms to the downside. 3 red candles appear, each closing near its low, each low printing below the previous low, and the range expanding as the move develops. On the close of that third down candle, the short conditions line up and the strategy signals a sell entry. This time the stop loss is positioned just above the swing high of the run, and the take profit is set below, again as a multiple of the risk. Price then slides down and reaches that target, completing the short example. Notice that the strategy never tries to predict a top or bottom. It waits for the structure to confirm an accelerating move and only then participates, always with its stop and target defined in advance. Of course, not every signal behaves this cleanly, and losing trades are a normal part of any strategy. So that's a complete walkthrough of the expanding Thrust Runner Expert Advisor for MetaTrader 5. We covered its pure price action foundation, the 3 pressure signatures it stacks together, closing pressure, sequential structure, and expansion, and how it anchors its stop to real swing levels while defining its target as a multiple of risk. We also walked through the code and saw the logic play out on a chart. Remember, everything in this video is educational information only and is not financial advice or a recommendation to trade. Markets carry real risk, and losses are part of trading. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like analyzed next, and subscribe for more MetaTrader 5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.